I welcome you all again to this session. We'll be doing the basic MCQs today, and in the next class we'll start depreciation, MCQ on depreciation. Right? Please just let me know if I am audible and I'm clear and you can hear my voice. Just write yes in the chat box. Taha, Elia, Omar, Omar. Omar, I think this is the first time you're here, so please write in the chat box that I know, Shapar. And let's move on to the question, right? Where you have some amount at prepaid at the beginning of the year, you paid 10,000 during the year. This certain amount is still owed, which is 2,000 at the end of the year. So what is the expense that you charge to your income statement? Looking for answers. Ata, Shapar, Elia, I'm looking for answer, right? Just let me know. Okay, great, Shapar, it's correct. Elia, it's correct. Shapar, would you like to explain that? I'm turning on your voice. Explain it to the other classmates. I could not hear you. Check out your device, please. Is it mute?
Can you hear me now?
Yeah, I can hear you very well.
All right. All right then. Basically, the business paid 10,000 for the more expenses. Opening prepayment means that the amount 1,500 was paid last year as a prepayment for this year. So
That
that means it's going to be it was subtracted last year, but this year is going to be included in our amounts. And the closing accrual was 2,000, which means that we have incurred the expense of 2,000, but we haven't paid for it. Since we have incurred the expense, we are supposed to add it to our income statements. So we will add 10,000, 1,500, and 2,000 altogether, which will give us 1,3,500, which makes D.
Thank you. Great, great. Thank you very much. See, I have done exactly the same what Shapar just told us. That there was a prepayment of 1,500, right? That was an asset and will be converted into expense this period. Now my beginning, look at my leisure, right? My beginning prepayment was 1,500. During the year, I paid cash 10,000, and at the end of the day, I still have an accrual of 2,000. So my total expense for the period is 13,500. Right, Omar? Let me know if it is fine with you. Taha, is it okay with you? The opening prepaid is converted into expense. 10,000 we paid as expense, right? So amount become 11,500, and there's another expense that we have not recorded, 2,000. So the total expense becomes 13,500, right? Okay. Let's move on to the next one. Please let me know if there is anything I could explain again, and if you don't understand. This again more or less the same question, right? We have some prepaid, and at the beginning of the period we paid certain amount we transfer to income statement, and we're looking for closing prepaid in this case. I repeat this again, we're looking for closing prepaid this in this case, right? I give you time to write, looking for answers. Oh, welcome Ramal, welcome Dua, welcome Rafe for the first time. Haris, I'm looking for answers. Uh, try and answer that. I got correct answer from Shapar, right? But I want anybody else to explain it this time. She's the only one who has answered it. Elia, I'm looking for an answer. Ramal, Rafe, it's an easy one, right? It is not difficult. Taha, try it again. Haris, try it again. Omad, let me know if there is anything that you don't understand, and I would like to repeat that. Um, Quick, I'm looking for any response from you people, whether right or wrong. Rafe, there's a chat box. Ramal, there's a chat box. You have to write your answer in the chat box. Fiza, If you know where to write the answer, try and solve it and let me know the answer. Doesn't matter it's correct or incorrect. I'm just looking for an attempt to solve the question. Okay, Shapar, it's again your turn to explain because you were the first to give the correct answer. The other people have given the correct answer. Let's explain it again. Um, Rafe, I was expecting an answer from you. Did not get anything up till now. Uh,
Alright, sir, can you hear me?
yeah, I can hear you very well. Go ahead.
Okay, so basically, the business had prepaid the rent of 700 earlier, and then currently they issued an invoice of 9300 again. So basically, 9300 and 700 is the total amount that they have paid. But the current year expense that they've incurred during the year has only been 9,000, since that income statement only holds the value of the current year expenses. So subtracting 9300, basically first we add 9300 with 700, we get 10,000. Subtracting 10,000 by 9,000 gives you 1,000, which is basically the prepayment of the year. Now, prepayment is an asset, so in the financial position, it will be treated as other receivables. So, hence, the answer will be D.
Brilliant, brilliant, superb. Thank you very much. See, I did exactly the same what Shapar said. You know, it's like thinking like an accountant. Uh, Look at my answer. My prepayment at the beginning of the period is 700, received an invoice of 9,300, which was paid. So the total amount that I recorded was 10,000, 9,300, which I paid this in this period. And then there was a 700 prepayment at the beginning of the period. So total becomes 10,000, out of which I transfer 9,000 to my income statement as expense for the period. Now 10,000 is not the total expense. The total expense is only 9,000, as Shapar said. So 1,000 is prepayment, and Shapar said it, that prepayment is now replaced by another terminology, which is other receivables. So the other receivable is current asset, or prepayment is current asset, but they don't use the word prepayment these days. They use the word other receivables, and which is 1,000. Ramal, let me know if it is clear. Haris, Omad, Omar, please give me your response. Is it clear? Because 700 was the amount that was prepaid, 9,300 we paid during this period. Total becomes 9,000. Out of this, only total becomes 10,000. Sorry, out of which only 9,000 is expense for the period. So the remaining 1,000 is prepayment, and we don't use the word prepayment these days. We use the word other receivable for prepayments. Okay, I'm moving on to the my next question. Right. Think, give yourself some time and come up with the arguments that you have in favor of your options. Uh, Haris, your initial answer was correct. You know, uh, now that's an issue here. Uh, A is the correct answer. Now, why A is the correct answer? You're talking about working capital. Working capital is current assets minus current liabilities, right? Current assets minus current liabilities, right? So if you increase the selling price of an item, right? Uh, the asset that you're selling, inventory is going out, and the cash you're receiving or account receivable the is more than the amount of inventory. Suppose you buy a pen, a marker for 20 rupees, and initially you were selling at 25, now you're selling at 30. So when you will increase the selling price, you will have more assets, more current assets. An increase in current asset will lead to increase in working capital. The other three are not possible. Why? Because they will not affect the uh, number D is actually reducing the current asset when in value of inventory is going down. So reduce in current asset will reduce the working capital. He's talking about increase in working capital, right? For B and C, in both the cases, both the current assets and current liabilities will have the same effect. So it won't change the working capital. The only thing that will change the working capital is either A or D, where D is decreasing the working capital and A is increasing the working capital. You're selling it at a higher price, means you are expecting more cash or more receivable. So your current asset will go up with no change in current liabilities. So increase in current asset will lead to increase in working capital, right? Okay, let's move on to the next one. It's an easy one. You know, it's something that I believe most of you should be able to answer correct. Okay, good, Shapar, your answer is correct. Rafi, your answer is correct too. Ta, good effort. Ta, would you like to explain that? I'm switching your voice on. Ta, your device is mute. Okay, Ta, try and fix your device. Shapar, would you like to explain that?
Can you hear
Yeah,
me, sir?
yeah, I'm very clear.
All right, then. Well, the business receives 50,000 deposit from a customer. So a customer has basically made an early prepayment to us. And
That's
for
right.
us, that is going to be a current liability since the money has been received, but we now owe him the services. So that makes 50,000 a current liability upon us. And yeah, that is how we're going to treat it in our financial position.
Great.
So
Thank
it's
you
going to
very
be B.
much. Yep. Great. See,
You're
as
welcome.
Shapar said, uh, we have received in advance. We have not provided the goods and services, right? If we have received in advance and we have not provided any goods or services, then that becomes a liability. So this will be treated as current liability, right? RS, is it okay? Ta, check out your device. Your answer was correct. Rafe, your answer is correct too. Let's move on to the next one. Now it's in this case, he's placing an advertisement in two different magazines. So you have to calculate uh, the expense for the period and then the prepayment for the period. Keep this in mind that his year end is not December 31st, it is January 31st. So any payment after January will be advance, right? If the payment is lasting after January, the amount after 31st of January, the amount of February, March, and April will be considered as advance. And the examiner is looking for the total advance. There are two different payments on the same magazine or two different magazines, by the same fellow, right? The businessman is advertising in two different magazines. One payment is for 6 months for 6 issues. Second payment is for 4 months for 4 issues. And my year end is January the 31st, right? Elia, I'm looking for some answers from you. Today you are quite, it's more maths than accounting. Fiza, Ramal, Taha, Haris, Umad. Excellent, Fiza. Your answer is correct. Would you like to explain that? Shall I switch on your voice? Let me know on the chat box. Work it out, Taha, quickly. Shapar, Haris, Ramal, Rafe. It's more maths than anything else. Great, Fiza. I'm switching on your voice. Please do explain it. And if you want, I can show you the working as well. Otherwise, you can go ahead without working. You want working, I can show you the working.
Can you hear me?
Yeah, I can hear you very well.
In this question, in for the first magazine, they said that its timeline is October 2014 till March 2015, and the year ends at January 2015. So after that, any payments are prepaid.
Okay, great. So what Fiza has just told us that any payment after January is prepaid, right? January 31st. So that will last till March. So February and March, 2 months is prepaid. Okay, go ahead, Fiza. You're right.
So this 900 is for 6 months. We'll find out for 1 month, which will be 150, and then we'll
That's
find
correct.
out. We'll multiply it by two, which will be 300, and for the
That's
second, we'll do the same thing.
right.
880 divided by 4,
That's correct.
and then we'll find out the prepayment, which will come 660, and when we add it, it will come 960.
Brilliant. Excellent. You know, that's right. Fiza, I'm glad. You know, that's right. Thank you very much. Okay. Let's see. I have almost done the same thing in a little different way, what Fiza said. And I believe Fiza's style was easier. Next time I would like to do that way. Look at my solution. What I did is, the first payment is for 6 months. Out of 6 months, we have already consumed 4 months, right? Why? Because October, November, December, and January. We have consumed 4 months, so that is an expense. The 2 months which are prepaid is February and March. The first payment of 900 is for 6 months, right? And as Fiza said, divided by 6, you get 150, and your air ends on January 31st. So it is advanced for the month of February and it is advanced for the month of March. So 150 into 2 is 300. I did it in a little different way. I did it 900 into 2 over 6. It's again more or less the same thing. Advance is 600. For the other magazine, the payment is for 4 months starting from January. The total payment is 880. The expenses for the month of January, and the advance is for February, March, and April. It's 3 months in advance, right? What Fiza said was easier to understand. You divide 880 by 4, you get 220, and again you multiply it for the month of February, March, and April, 3 months. I did more or less the same thing in a little different way. It's like 880 into 3 over 4, 660. So there was 300 advance from the first advertisement magazine and the 660 from the second. So 300 plus 660 makes it 960. And 960 is prepayment. And as we have discussed, and Shapar has told us that it is no more considered as prepayment. Rather, the new terminology is these days other receivable. So other receivable is 960. Now, before I move on, please let me know, Rafe, Aris, Taha, Ramal, Elia, please let me know if it is okay with you, Dua. Okay, Ramal, can you please take a snapshot of this question? So when I will explain it, you will have a picture in front of you. Just take a snapshot. Okay, now come to the answer. See the payment, the first payment is 900 for how many months? As Fiza said, it's for 6 months, right? So, and your year end on January the 31st, and the payment will last till March 31st. So this payment is advance for 2 months, February and March. So this is what I did, 900 into 2 over 6, and the advance payment is 300, right? For the next one, 880 is the total payment for the next magazine, right? And that was made in the month of January for 4 months. January, February, March, and April. Will consume for the month of January, it is advance of February, March, and April. So 880 into 3 or 4, which is 660. So in one of them, it is 300 advance. In the other one, it is 660 advance. So the total advance is 960, which is considered as other receivable. Okay, let's move on to the next one. Raman, let me know if it is fine with you. Okay, this is an easy one, right? Try and answer that, and I want each one of you to answer this. Rafe, answer this well. Okay, great, Shapar, Rafe, Feza, Elia. Correct. Elia, I'm searching on your voice. Explain it to the classmates.
Sir, can you hear me?
Yeah, very well.
So it is said that an adjustment for prepaid rent was required. So what will be the effect of this? If we look at part A, expense will decrease and current asset will also increase. Expense will decrease, but in current assets, prepaid is our asset. It's a receivable. So it will increase our current assets, and as Shapar said earlier, prepaid is for the next year, so it will not be added in this year's final income statement. So it will be subtracted from the expenses. So the answer will be B. Expense will decrease and current asset will increase.
Great. Thank you, Elia. Thank you so much. Right. See, I have more or less the same explanation what Elia has, that your expense are going down and your assets are going up because prepaid is recorded as other receivable these days, and other receivable is an asset. So your current asset will go up and your expenses will go down. Okay, let's move on to the next one. And this is simplest of all the questions that we have done up till now, right? And Rafi, this time I'm looking for an answer from you and you have to explain it as well. Okay, wonderful, Chapar. Great, Fiza. I want somebody to explain it. Uh, Fiza, I'm switching on your voice, and I want you to explain the other options as well. Why are they not correct? Try and do that. Whatever comes to your mind, but your answer is correct. I'm switching on your voice. Please go ahead.
Can you hear me?
Yeah, I can hear you very well.
Okay, so the first option it's wrong since it's it's the entry when you buy the fixtures.
Okay, great. Listen what she's saying. So the entry is wrong. This entry would be there if you have bought the fixtures. Okay, that's correct.
In this case, you're returning the fixtures, so
Right.
and you're returning them to the supplier, so it cannot be purchased return.
Right. See, this is very important. If you're returning the fixture, it is not purchase returns. Purchase return is for goods or inventory. Fixture is something that you install in the office. So if you return fixture, you cannot use the word purchase returns, as Fiza just told us. Go ahead, Fiza. Very good.
And again, it cannot be D as well since fixture and fittings is an asset and cannot be recorded as purchase return.
Right. Right.
Therefore, it will
Cannot be
be
recorded
the
as purchase.
supplier debit and fixtures and fittings credit since assets are decreasing
That's great. Brilliant. Wonderful.
and
Thank
their
you. Great
accounts
contribution.
payables are increasing.
Right. Great, Fiza. Good contribution. Okay. Thank you very much. See what Fiza said? You cannot use the word purchase returns for asset. If you're returning an asset, you have to credit the asset. Purchase return can only be used for goods, for inventory, right? Though I'm looking for some contribution from your side, you're not answering anything today. Try and answer whether it's correct or incorrect. Rafe, is it fine with you? I was expecting an answer from you on this question. Ramal, is it fine? Okay. Elia, is it okay with you? I'm moving on to the next question. Okay, Larib, good. Your answer is correct. Would you like to explain it? I'm switching on your voice, right? Try and explain that. Say something, whatever you want to, and let us know how you're getting the correct answer. Your device is muted. Check out your device. Okay, there's something wrong with Larib's device. Let me just explain it. There is currently a loss, right? And in addition to this loss, Omar Rafe, uh, in addition to this loss, there is bad debts which was not written off. And if you will write off the bad debts, it will increase your loss. Am I right, Dua? Ramal, Elia, am I right? If you write off the bad debts, it will increase your loss. And decrease in provision will increase profit or will reduce your loss, right? Provision has inverse relationship with profit. So if you are decreasing provision, your profit goes up. Look at my answer, right? And let me know if it is clear with you or not. The draft loss plus another expense, which is bad debt written off, minus the provision, so that your final loss will be by adding expense and by deducting decrease in provision. Please let me know if it is fine with you. Rafe, Ramal, Elia, Dua, say either a yes or a no. Omar, you haven't replied anything, Great, Larry. I'm glad you did the right, you could, gave the right answer. Okay. Uh, what would be your selection among the four options? Ramal, I'm glad you got the right answer. If you would have told me earlier, I would have opened your voice for that, you know. And please inform me when you are done, so I can open your voice. Otherwise, if there is anything bothering you in any question, just let me know. Omar, despite my reminders, you're not responding anything. Are you hearing me? At least answer that. Are you hearing me clearly? Yes, Ravi, I'm looking for an answer. Shapar, Elia, Dua, Ares, Taha. Okay, great, Larib. It's correct. The answer you gave is correct. Shapar, the answer you gave is correct. Would you like to explain? Shapar, I'm switching on your voice because Larib's voice, something wrong with his device.
Alright, sir, can you hear me?
Yeah, I can hear you very well.
Alright then. If you make a T account or discount received, generally discount received is credited against
Right,
the supplier, and
right,
because it's going to be a revenue to your income. It's going to be an income in your
right.
financial statements. So it's going to be discount received account will be your debit entry, and when you close off a discount received account, you will see that the income statement is going to be debited. Hence, while discount received is going to be debited and income statement is going to be credited. All revenues are credited in the income statement, so that is why.
Great, great. Correct. Thank you very much. Wonderful. See the choice of words. Shapar said one thing, that all the revenues, all the incomes are credited to the income statement. And she said this is how we close the income. Right. So she has a fairly good idea what she's talking about. We close all the income and expenses to the income statement. So and she said by nature discount receive is credit. Right. In order to close it, you have to debit it and transfer it to the income, right? And she further said that all the income or revenue items are closed down and credited to income statement. So the correct entry is discount received, which is by nature credit. We are closing it, so we debit discount received and credit income statement. Discount received debit and income statement credit. Very good choice of words, Shapar, this time. Very well, I'm impressed. Okay, let's move on to the next one. And this is perhaps the last of today's questions. Yes, there we are. It's an easy one. Make a T account or add and subtract and let me know the expense for the period, right? And I want somebody, Ramal, I want an answer from you, Dua. It's just addition, subtraction, Rafe, Ta, RS. Omar, you are not replying anything, bache. Okay, Ramal, great. Correct. Ta, correct, Shapar. Lareb, good. Ramal, shall I open your voice? Would you like to explain it? Um, you know, it's just that I want you to explain it to your classmates, like Fiza did, or Shapar did, or Elia did. Check out your voice, it's mute. your device. Okay, we'll do it next time. Taha, shall I open your voice and would you like to explain it to us?
Hello, sir.
Yeah, I can hear you.
Yeah. So, sir, we'll make a T account, and our
Okay,
brought down balance is 4,000. Our
our
cash paid
drawdown
is
balance is
41,000,
right.
and then we have 7,000, and then we'll add 41,000 and 4,000, which is 45,000, and minus 7,000, which we have is 38,000. Part
Great,
B.
that's correct. Thank you, Taha. Thank you very much. Okay, so I'm just repeating what Taha told us. It's like 4,000 was the beginning balance, 40,000 we paid during the year. Total amount is 45,000. Out of this 45,000, 7,000 is still prepaid. So, I mean, my opening prepaid was 4,000, my payment was 41,000, the total amount was 45,000. Out of this 45,000, 7,000 belongs to next year, right, to next period. So 45,000 minus 7,000, 38,000 is my expense for the period. Thank you very much. Thank you for all your contributions, Shapar, Elia, Fiza, Taha, uh, and all of you. Um, Ramal, ensure next time your device works. So we will have your contribution here as well. Rafe, check out your device so we can have your input as well. Dua, let me know if you have any issues. I can run through them again. Thank you very much, and we'll be meeting on Tuesday with depreciation MCQs. Thank you, and it's over from me. Allah Hafiz.